Okay, so I'm going to go ahead and first, before we get going on the actual one, this is for John. Up at the top, once you're in your Gmail, you'll have this little boxes here. Click on it, go to your drive, and let me see if I can find one. Okay, so here's one that I think was shared with me. So go into your document, then up at the top right-hand corner, you're going to see a share button. That's what I need you to click. And you can do it one of two ways. If you want me to be able to edit it, you're going to, down here, enter my email address. So it'd be BRY, whatever. You'll enter my email address, and you can make it so I can edit it, or you can make it so I can comment or view. I just say comment or view for me. And then hit send, and it'll send me a link to your spreadsheet that I can comment and view on. I would do can comment, so that way I can comment directly to your journal, and that'll fix up the issue we've been having with me not being able to see what you're sending me. And we'll get going here in, say, 2-3 minutes. Well, actually, we're already recording, so we could just go ahead and get going. Okay, so we're going to be covering swing highs, swing lows today. Again, Norman's is the one who did the document. I ain't taking credit for nothing. Basically, it was some of his questions, but he had them drawn up really nice, so I figured we could use it as an example before we look at charts. If I'm not saying your name right, I'm sorry. Okay, so as he points out here, there's basically three situations you're going to have with a swing high, swing low. All we're talking about with a swing high, swing low is when price moves up, down, and then up again. The first one you're going to get is when price breaches, and let me make this very clear, closes above the previous swing high. Now, when it, and let me, before we get into all this, let me say, by watching the screen this way, you do need to take it into context with what the market is doing. This isn't a be-all answer. It doesn't work 100% of the time. It's just another thing to use to help you make a decision when to take a trade or when to pass. It can, if you're using Itchy in combination with it, help you identify when you have a very good potential for a run, which sometimes you're going to pass on a trade and it's going to reverse like crazy. Sometimes you're going to pass on a trade and it's going to go on a run. But either way, you're protecting your capital by being a little bit careful and using a little bit of common sense. So we're going to first look at the basics of it, then we'll go to some Itchy charts and look at it that way, and then we'll look at it at some normal charts too. Okay, so like you said, situation one, and there's going to be three different ones that you have with swing highs, swing lows. When price closes higher, and not breaches and then drops back down, when price closes higher, that could be considered, depending on market conditions, a possible run. It may not, if you're doing pullback reversal trading, it may not reverse there. It's depending on what the chart looks like, it could be a potential run. We're going to look at charts in a bit and see when it's more likely it's a run and when it's more likely that it's not. Okay, so situation one, we have price moves up, pullback, price moves up, and close higher than the last previous swing high. And that would be indicative of a run with appropriate market conditions. Situation two is going to be, and as I call it, it's an ambiguous candle, which means price moves up, price moves down, price moves back up, but it closes at almost the exact same level as the previous swing high or swing low. That right there is just, it's not giving us enough information to make a decision. It's not telling us it's a run or a pullback setup. It's just saying it's ambiguous. It's 100% not enough information to really make an educated guess. On those, I would most likely, unless I have very, very strong Confluence, and I mean like a 3 to 5% trade, I would stay out of them because I am not sure of what's going to happen with price. The third situation we're going to have is when we get price moves up, comes down, and then moves up and closes slightly below the previous swing high. What that's going to show us is that a reversal is most likely going to happen. Now, This isn't just the pattern. This means when you're overbought, oversold. When this candle closes here and you're overbought, oversold, and you have Confluence for reversal, then it'll probably happen there. That's the type of setups you're looking for. That's when I get a setup like that with a shit ton of Confluence, that's when I'm doing 5% trades. If I'm doing a 3% trade, I will do 3% trades on something like this. How I know that's going to reverse. Okay, again, nothing about this is 100%, but if it's this one and you get this setup, okay, so on the third case, if you get this setup, all you're doing is you want to know this pattern's there. Then you're going to be concentrating on your charts. On your charts, do you have enough Confluence? When I say enough, do you have a 3 or 5% setup? But otherwise, do you have 2 or 3 institutional levels, 2 or 3 current market conditions that are all lining up together to say, yes, there is. I have the pattern. I'm overbought, oversold. Now can I line up some reasons? Does that make sense? And if you can't see it on the other screen, I have questions coming in. So all the pattern there is, think of the pattern as another Confluence reason. It's just something to add in, saying, okay, I have more reason now. It's setting up basically what I have here. This is my setup for a 5% trade. When I can get this and I can line up like 3 institutional levels and 3 market condition levels with this setup that you see on the screen with this swing high, swing low pattern, then I have a 5% trade. So that's what finishes up a 5% trade. Now, if I can get all the Confluence in the world, but I get this kind of setup, this would be a 3 or a 1% depending on my Confluence reasons. And this one here, there would have to be something insane going on for me to get into a trade like this, because most of the time I will pass on a trade like this unless I have, which is very rare, like a monthly pivot, a weekly pivot. Basically, if I can line up all my institutional reasons and my market condition reasons, I'll go 1% on this. Other than that, this is a pass trade. This is a potential 1 to 3% trade. This is a potential 3 to 5% trade. So I guess we're going to get into money management a little bit too, because I'm showing you exactly how I do it. So do we get it? First setup would never, ever, ever be above 1%. Most cases a pass. Second situation is a 1 to 3% trade. Third situation is a 3 to 5% trade. You're using the pattern to help you out with your money management and Confluence reasons. That makes sense? Oh, we're supposed to answer so I can drink coffee. Okay, so now that everyone understands the 3 situations that we can have before I switch to charts, because I don't want anyone to be lost, do I need to review any of the 3 situations that we could potentially have? If you don't understand it, say so. This is the internet. Nobody's going to come to your house and point your finger at you and say you're a dumbass. And you're not. This is probably new to some of them. I'll talk a little slower then. Is it lagging for anyone else? Let me turn off the chat room. Okay, I turned off the chat room. Okay, I am recording it, so if it is breaking up for you, there'll be a high definition recording too. So you said you had another question. Go for it before we go on to the charts. And I want to make sure everyone's clear on the 3 potential setups or any other questions before we move on to charts. It is candle close. We ignore the wicks in this case. We only look at bodies. The wicks are just there to tell you the story of the candle. Generally speaking, my support and resistance is drawn off candle bodies, not wicks. Wicks are there to tell you the story of the candle. They're not there for you to trade off of. Any other questions before we move on to charts? Okay, let's see. Okay, so we're going to take a look at a few charts. And I'll probably see if I can... Let's find UJ, because that was the one that a lot of people got caught on. Crap, I just closed the room, so I can't even... Oh, wait, I know where the picture is. Give me 1 second. Let me get the picture real quick. The trade that I took was... I'll mark it while I get the picture. And if Raiden's in the room, Raiden can say, on this candle here, I said that was a dumb trade, should have passed and waited, and this was the trade I took. I'm not saying I'm right all the time, it was just for me, and I'm going to explain. We had an ambiguous candle and then a good candle. But let me find the post real quick, or the... It'll take me 1 second, I didn't even think to have this up and ready. And I can show you another person who took the exact same trade as me. But for now, let's just get this up. Okay, so that's the UJ chart. Now here it was a little bit ago. Okay, so let me take a picture of it so we can edit this picture too. And I'm going to show you what I was looking at, why I passed and why I took. Okay, so we have our price right here. Now price was going flat and it moved up. Our first, I guess you could say, ambiguous candle was right here. This one. Now why was it ambiguous? Which means we really don't know what to do with it. It closed almost exactly at the previous swing high, swing lows. This was a good support and resistance level. It was, we count back 1, 2, 3, 4... 1, 2, 3, 4. It did not go overbought, oversold yet, but just so you can see, that was the first ambiguous one. The next one, same thing, dojied. Okay, so where someone else got into the trade, let me bring chat back up. I'll talk a little slower since it's lagging. This was our first ambiguous candle, no overbought, no oversold. So what's the next swing high, swing low we're looking at? Is right here, and remember, your drawings don't have to be exact when you do this. Now this one was overbought, oversold, and I was starting to get into reasons for it. We look over here, institutional wise, we had no reasons. Market conditions, we are coming into some reasons. We had, this is my hourly FIBO. It was there, but that's all I had on that. So Confluence-wise, what did I say? On an ambiguous candle, I want a 3 to 5% trade if I'm going to take it. That was not a 3 to 5% trade, so I passed on it. Our next one, and let me delete this out so you don't get confused by the next line. Actually, I'll just draw it. So our next swing high, swing low was right here. I know it's only a tiny bit above it, but by it moving just that little bit, what happened there? All of a sudden we got Confluence and we had reasons to take this trade. So this candle closed higher. So this, if we remember back on the document, it was a number 1 setup. On a number 1 setup, I said I would only take this if I had basically a perfect setup. I didn't take this trade big, I took it 1%. Reason why is it closed higher. But reason-wise, I could come up with 1, 2, 3 institutional reasons. Number 4 was my current market condition. It had breached out of the 161 level for the hour. It was hitting a weekly high, which also means, of course, it was hitting a daily high. Down at the bottom, stochastics was maxed out above. It had just hit 95. And I have a, if you're not TA, you won't know what it is, but the TA confirm Indy popped too. So now, even though I had a setup that went swing high, and it broke the high, closed higher than a high, which would indicate a run, I had enough Confluence reasons that I could stack to say I will take it at 1%. Now remember, on this type of setup, will I ever take more than 1%? No, because there's a pretty good chance that thing could have just shot up. Even though there was a brick wall here for it to run into, there's always a chance that it could have shot up. So statistically speaking, I will stick to a 1% trade on this. It's either super good setup, 1%, or it's no trade at all. That it's just as simple as that. When you're trading, you need to have rules for your money management as well as rules for your entry. It'll really help you make split second, not split second. Yes, it was 10 minutes before the US candle, I believe. Once I was in the trade, it was 5 minutes before it. Plus, there was news coming. I cheated my ass off on this one, to be honest. But look at the institutional levels. I had enough there. I had 3 institutional levels, and I was stacking the shit out of current market conditions. So that's why I took it. But 1% only. I would not have gone 3 or 5% on that. Okay, so for situation one, everyone understands how you would take one, and most of the time it's going to be a pass unless you have a perfect setup. If you don't understand, guys, just ask. I mean, I don't mind going over it or answering any questions. Some of this is going to be new for people, so don't worry about it if you don't know. Just ask your questions, get it out of the way. Alright, so let me close. On this type of setup, when it is a swing high and it closes higher, your number one situation. On situation number one, I only take 1%. I only take the trade on a perfect setup. As we move down your list, my percentages increase because they're better setups. So I'm using what you learn in TA plus the swing high, swing low to confirm my trades even more. So Confluence-wise, I mean, I'm stacking all kinds of reasons. Sorry, my head is itchy today. It's the cold weather. Okay, so let's close this one up. We'll see what we can find on the charts. If anyone has a screenshot that they have handy of a swing high, I know Norman's, you've been doing it, so if you have anything that you want to bring up, just send it to me and I can bring that chart up. Oh, I'm trying not to hiccup. No, I don't want to save. Damn it. Close. I want to save? No. Okay, cool. So situation number two, we're going to see if we can find one of this. Well, we did already show situation number two. Do I need to go over situation number two again? You saw the reason I passed on UJ. I can go over it again if you didn't catch it, but situation two is UJ and why I passed on the trade, because we had an ambiguous candle. And it was not qualified. It was not overbought, oversold, and it had no confluence around it. So I could not move it into a trade at all. If I see one on the charts, we'll review it again. If you need me to bring it up, I can do it again so we can cover situation number two. I take it by the lack of comments. That would be we're good. If not, guys, remember you can always go back and watch the video so you can review situation number two. Okay, so situation number three is where we get into what would be called the perfect storm. If we can combine everything together with this type of setup, we are looking at a way to do a 3 to 5% trade. Just to review again, the top one's a 1%. This can be anywhere from 1 to 5%, but I typically, like I said, I would prefer to keep this at a 1 to 3%, and this to a 3 to 5%. That's just me personally. If you find that something else works better for you, don't worry about it. Stick with what works for you. Keep your journal, though, so that you know you can track your metrics. I preach journal in every webinar I do just about. Your journal is the only way to gauge your metrics accurately. All your metrics are is your performance. If you do something odd in a trade and you think it's working, just note your trade that this is what you did on that trade and it's working, so you can see if long term it's working. Like one of my guys is breaking the rules in TA, but he's hitting 80% doing it. But he's noting down those ones where he cheated on so he can gauge his performance on that to see if it works long term or short term. Okay, so number three, I don't have an example of. We're going to look to the charts for it. And let's get to a chart. Can I get that journal? Yes, you can. I'm going to send you the one that I showed that's all filled out already. So all you'll have to do is, at the end of this, I'll stop recording and I'll show you how to make a copy of it before I end the webinar, okay? That way all you have to do is make a copy of it and you have the setup. Okay, so let's look for a swing high, swing low that went overbought, oversold, and worked. Well, even if it didn't work, just so we can see why it didn't. If I don't find one, then that sucks, but oh well. Let's see, overbought, oversold. See, this here, what I'm looking at, it went overbought, oversold. The swing high, swing low was lower than it. If we look over to the right over here, I have no confluence. So then I'm staying out of that because I didn't have the confluence for it. Even right here, I only could pick up, at the most, I could pick up one institutional reason. So that would have been a pass. Let's look again and see if we got any. Here's another swing high, swing low. So where are my swing high, swing lows that I'm looking at? I'm just going to show you swing high, low examples that are good, and we'll see if we can find an actual trade. These are my swing high, swing lows I'm looking at. Ah, cool. There's the video to do it. So this one here was another swing high, swing low, but what did I do? I ignored it because it never went overbought, oversold. Again, I'm looking for confluence reasons to line up to keep me above that 65%. Otherwise, there's no point in trading. So we had two swing high, swing lows, so there's your examples, but we have no trades. We have no confluence on them, no reason to take the trade. Let's move on to the next one and see what we can find. Cable is just a mess. I'm not even going to look at that. We do have one here. Here's our... if I could draw. It's ugly and it's a mess, but here is our swing high, swing low, and it closed lower than it. We had, let's see, confluence-wise, didn't really have jack. So that would have been a pass. With a lower close, remember, with this lower close and this, we want a solid setup. Yeah, he did keep focusing on it. So with this one, on a shorter term trade, maybe, but for a 5-minute trade, it's a stay out. I have no institutional reasons here to get me in and out of that trade. Nothing for the price to run into, like a, I was going to say something. It's like a retard running into a wall. There's no wall for them to bounce off of. And I'm sorry if that's not politically correct. Okay, so we now... let's see. Okay, so we do finally have one here. Now this one isn't the easiest in the world to see. Right here, do we see this candle? It's not pretty, but book-wise, it is there. So let me draw the support and resist on it, and we'll see if it lines up. Okay, I'm going to zoom in on this one because this is very close, but it is a textbook. Actually, let me just... I'll take a snapshot of it so I can draw over this ugly little bitch. Okay, so here's the candle we're going to be focusing in on. We're going to be looking at this candle right here. What am I looking at it? It closed below this swing high right here. Sometimes this is all you need, guys. You just need to be able to look at the chart, recognize the pattern. What did we have here? It went overbought, oversold. Stochastics was getting up there. Was it perfect? No. We didn't have a confirm down here. And let's look at institutional levels to the right. Would we have had a trade? We had one institutional level, but for me, this is one of the stronger institutional levels. And since I zoomed in, I'm actually missing what's here. We'll go back and look. Real quick, let me check. Let me zoom out one and see what we had. Okay, so we only had one institutional level. But this is a good example where I would have probably taken this at a 1%, and that is it. Reason being is I got the setup I need. Price closed lower than the previous swing high. We had an institutional level. We're overbought, oversold, and stochastics. So we might have had more with market conditions, but we can't see those since it was in the past. But let's count up what we can. We're overbought, oversold, and what I call core qualified. So now we have a reason to look at the chart. So the next thing I'm going to notice is my swing high, swing low. It closed lower. And the next thing we want to look at, institutional levels. So I can pick out 1, 2, 3 reasons for the trade. Most likely we would have got a little bit more with the hourly FIBOs, but that's an example of more of a perfect setup because it pulled back down. Now, like if you were trading 60 seconds, like Lots is in the room, that's who's commenting. If Lots was in here, he probably would have taken a 60-second trade on this candle once it breached above it because it was going to drop back down, depending on how it looked on the 60 seconds. On the 5-minute, it gives you a little bit more time to think. I'm not going to lie, there are some people out there that trade TA 60 seconds. I keep them out of the room from commenting because for newer people, they fail at it because they do not have the time to make an educated decision with trading this way. So if you trade for a year and you become really good at it, you could bump down to a 60-second. I got some people, and I don't want to hear they're retarded or anything, they're more comfortable with a 15-minute time frame because their ITM percentage is higher. The system's designed for 5, and I teach it on a 5 because that gives you the repetitiveness you need to learn. And this is with anything, and don't take it as just trading axis. Trade at a time frame that lets you have enough time to think and enough time to get the repetition in. If you're trading at a 30-minute time frame because you think your ITM is going to be higher, all you're doing is slowing down your learning cycle. Push it up to the point where it pushes you a little bit to make a decision, and then decide, well, I want to bump it up to 15 because that's what I like, or hey, I'm great at this 5-minute shit, I'm going to drop it to 1 minute. We'll look and see if I can find any more of the situation number 3 setups. Nothing there. We have one here, but it's on itchy. Oh wait, that's the same one we were looking at. Yeah, I'm an idiot. You can say it. Here we have an ambiguous one. That's UJ, we covered that. AUD USD. Here's AUD USD, and a good one that shows. So let me mark the swing high, swing low that we'd be looking at. And this is a good reason for a pass. Here's the support and resist, and I'll make the line a little bit bigger this time. We're going to put it right in the middle of these 3 candles, kinda. And this would be a situation number 1 where it breaches lower. So if it's a number 1 situation, that means we're going to be looking for a hell of a reason to take the trade. We're not going to be just jumping in on, what's it, namby-pamby. Sorry, I watched Drop Dead Fred last night. Here, let me get rid of that indicator so we can see the list. Delete. And let me change the background back. Sorry, that's my charts change color at the top of the hour or bottom of the hour so I can check my Forex trades. Okay, so blue is our previous swing high, swing low. We also have one here. So we have a swing high, swing low, which here's a swing low and here's a swing low. We're going to be concentrating on this candle. And it breached lower here and it breached lower here, so it closed below. So what's the first thing we're going to do? Yes, it's overbought, oversold. We could potentially look at it as a trade, but since it is not the ideal setup, it's actually the worst setup we can look at for a 5-minute trade. What's the next thing you need to do? You need to stack a shit ton of reasons. Can we stack a shit ton of reasons to get in a 1% trade here? Let's take a look at what we have then. Here is the candle, and I'm going to draw a box from the top to bottom of this candle. And let's see what kind of reasons fell into this. We had Murray math lines, a daily FIBO. That's too institutional. If we go over here and look, it's overbought, oversold, and it was core qualified. Now, let's just give it, stochastics was way out of it, so that doesn't even come into play. So the next thing we would look for is current market conditions. This would have been a FIBO right here. This is probably going to confuse y'all, but I'm trying to recreate what was on the chart at the time. If it picked it up, that would have been an ABC pattern right here. So we would have had A, B, C, and our move downward to D. And it would have been about a 161. So far I have 2 institutional, 1 current market condition, and that's it. So on a 1% trade, is that enough for me? No. I would have just passed on this because most likely what I'm looking at is a movement downward on the next candle. If I could have lined up more institutional reasons for this trade, then possibly I could have gone in at 1%. But again, when it comes to when it closes higher than this, or it closes lower than the previous swing low, or closes higher than the previous swing low, then I want to stay out of it. This one broke through 2 previous swing lows and then closed. So for there, you want to really line up your institutional market condition reasons, or however you're trading, you want to be damn sure you have a good reason to get in here. The price isn't going to bounce off nothing. It has to have, just because it's overbought, oversold is not a reason to buy. Overbought, oversold is just a condition to get you to the chart, to look at the chart and say, well, why is it going to reverse? Because it's overbought, oversold. If there's no reason for it to reverse because it's overbought, oversold, it can just continue being overbought, oversold. I mean, we've seen, Euro, I think, has gone 24 candles in a row and stayed overbought, oversold for, if you want to take worst case conditions. Let's see if I can find, oh shit, we're on red charts. That pretty much sums it up, guys. We covered the 3 conditions. I didn't want to make this super long. So, just quick review. You have 3 conditions. The first one is when you have a swing high or swing low and price closes higher. The candle closes higher, we ignore the wick. The wick has nothing to do with any of this. It's always the candle closing. Market conditions, you need to take those into consideration. If the market is trending heavily, just because you have the number 3 situation that looks good and the market's trending heavily up, are you going to trust this? No. These work best, this type of thinking works best in arranging for pullbacks. Now, if we're in a heavily trending market and I get this, what's that mean? It means I'll probably take it with the trend. So it can be used in different ways. If you're a trend trader, you can use this pattern to say, we're trending up nicely. I got my setup here. Now I know when to enter. That's based off of an itchy rule, actually. We can look and see if I got one real quick just to see on itchy. This one's an ugly one, but just so you can see on itchy when this became an actual itchy trade. Here's a swing high, swing low, but we also have another little one there. This is ugly, but I just want you to see kind of how it works. So here is our support and resist. On itchy, by the rules, what I'm looking at, price came out of the cloud. We would have had, if the cloud would have been red, this would have been our entry candle right here to go with the trend. If you don't understand itchy, I did a whole thread on it. I will probably do swing high, swing low with itchy, or maybe a more in-depth detail of the rules next week if people show interest in it. But for now, we're just going to keep it simple and look at ranging markets and how to apply the system to it. This is UJ. I guess we could take a look real quick because this is a perfect example of the run. There's our swing high, swing low. And you're going to see, just remember this type of pattern because you're going to see it over and over and over again. When this hit, here's the forward cloud. It was 26 periods forward. So if we go back to here, we would have had a little bit of a green cloud. So this would have been an entry candle here to go with the trend. I know it doesn't make much sense to you, but the guys who have studied itchy, there it is. If you're doing itchy, I regularly recommend learning it on the 5-minute, and then you can move up to a higher if you want. But that would be our entry candle there for a with the trend. It would not have been against the trend. If we were looking at this over here, which I'll get rid of it just so we could see because this would have been a pass. I'm not going to screw with it, actually. We covered. Any questions or anything before I end it up? I don't want this to be like a 45-minute webinar. Other than that, I'm going to upload it so you can go back and review it. Again, focus on looking for those number 3s. The number 2s are okay, but remember the lower, if it's situation number 1, you basically want a castle in front of you before you take the trade. Number 2, you want a brick wall. Number 3, you can lighten up on the reasons, but if you go light on the reasons, adjust your money management. And that pretty much sums it up, guys. So let's see. I'm going to stop recording, and thanks for watching.